So, learners, welcome to the part 2 of chapter number 1 of our course of Basics of Economics. And in this, you are going to study a little more in the basic terminologies and the understanding about the various branches of economics and other such terms. So, the first part that we are going to understand is that there are two branches of economics. One is what we call as the microeconomics, and second branch is what we call as the macroeconomics. Now it's interesting to understand that this particular terminology was designed in somewhere around 1933 by Sir Ragnar French. Okay, and what he did, he coined these terms as micros and macros. So on that basis, it became micro and macro. Okay, so now what is the difference between now these two terms? The first thing that differentiates these two things is that micro means basically we are talking about small, and macro means we are talking about a larger thing or aggregate, or we can say total. So it's on a larger scale. In economics, when we are studying, we are talking about both micro and macro, right? And in economics, it is important to study both of these because they would be useful in different situations. These two terms will be used, and in different situations, these terms are going to be very, very important. So now what does the microeconomics deal with, right? That is what the first thing of our area of interest would be. Now, as the term says, micro means small, means it is talking about something connected to individual level. So it would be a household, like we say, household income, household expense, how much is the earnings, how much is the per capita income, and so on. So, household level, we are talking about the household level, the worker level, the employee level, the firm level, or a specific industry level, right? It would be on a smaller scale. Second thing, on the same basis, if we are talking about macroeconomics, macroeconomics would be talking about the whole. It would be talking about the entire economy, like the GDP, the gross domestic product. Then it could be talking about national employment, national income, then total investment of nation, and so on. So that is on a larger scale we are talking about. The same things on the smaller scale, when we talk about, they become the micro. And when these same things are spoken of on a larger scale, they would become the macroeconomics. Hope this part is clear. Now the next thing we need to understand is Kenneth Boulding's definition of microeconomics. Kenneth Boulding said that microeconomics is study of particular firms, particular households, individual prices, wages, incomes, individual industries, and particular commodities. So he's talking about again the same thing what we spoke of is on an individual, on a small level, the study of economics happens. And in case of his definition, Kenneth Boulding's definition only of macroeconomics, what he says, macroeconomics deals not with individual quantities but with aggregates of these quantities. So if we are talking about income, income in microeconomics would be the individual income, the household income. Whereas if we are talking about in macroeconomics, it would be the national income, right? So on a larger scale, in case of product price, if we are talking of individual price, it would be microeconomics. If we are talking about the general price level of the industry, it would fall under macroeconomics, right? So this is the distinction between micro and macro, and this is very essential and important to understand the overall perspective of economics. So unless and until you talk of both, economics cannot be said to be complete. Now we are going to talk about the basic concepts of microeconomics, the smaller economics that we're talking of, individual level economics that we're talking of. And in microeconomics, the first important term that we need to understand is want. Have you heard of this want term? Yes, definitely. Even you sometimes say, I want this, I want that, right? I want a house, I want a car, I want a job, I want maybe whatever, a salary package, I want this, I want that, right? So wants would be somewhere where you're not satisfied, you're not having it, and so you need it, right? So it is lack of satisfaction. So want, as in case of economics also, it says defined as that it is there is something as a lack of satisfaction, and so you are asking for it. Sometimes want would also be classified in general as need. So we use these interchangeably. I need this, I want this, right? Now, human wants have grown, right? We see globalization, we see so many industries, so many products being available. If I want a pencil, also, I will get 10 different brands, 10 different types. If I need a pen, I may have a gel pen, I may have a ink pen, I will have a ball pen, I will have different 10 different options, colors, and so on. So, when we talk about want, right, what I want a pen, but which pen? So there are options, right? Once the greater number of options are there in front of you, larger number of options are there in front of you, economics will play a very important role, because we need to choose, correct? We have seen this in the first part of this chapter, that wants are unlimited and we need to choose, make a choice between these wants in terms of resources that we have as available resources. So we have to match them and then decide, I will use this resource for this particular want, correct? Now when we see characteristics of the wants, the first important characteristics is wants are unlimited. If I ask you today, come on, list out what do you want in life, you would have a huge list and it will keep going on and on and on, right? And every day your wants will keep changing sometimes, right? It may not be the same every day, but wants are unlimited. Now, obviously, some wants are recurring in nature. Food, for example, every day I need food, right? Choice of food may vary, but food is something which I want every day. Clothing is something which you want every day, correct? So, there are certain items which are wants and they are recurring in nature. Then, wants with age will also differ. So, what we want in childhood, we want a toy, in when we are grown up, as we become a college going student, we may need beautiful clothing, we need different types of books, we need some things for our projects, right? For going to college we need vehicles. So all that we need. When the age changes, as you grow a little older, you may have something else as your want. In old age, retirement days, you will say, okay, I just want a relaxed life, so I want a cozy home, I want a person to help me around, and so on, right? So in different age groups, different wants will arise and different wants will be there. Now wants also differ with gender. So if we are talking of a woman, a man, a girl, or a boy, it will differ, right? So if we are talking about a girl, she may want jewelry, a boy may want a car. Of course, it's not a rule list, but in general, if we say with gender, the wants are different. The wants that people have are varied, correct? So, this is how even the marketing thing is done, even how the products are reaching the consumers, this is taken care of. So, if we see, if you're talking about the advertisement, which is for boys, which would be connected to cars, it will be like a very adventurous thing. It is like attracting girls, and girls are looking at that particular car and so on. So it will differ with the advertisement which is pitched for a particular gender will be different, correct? Because their want is different. Then wants differ due to preferences, right? What I prefer also, even if it's a gender generalized thing, it may not be true for everyone. Like wants with age also may not be true for everyone. Some may in the childhood itself may want something like a robotic project to be done. So what a person may normally aim at in college days, this particular child in maybe standard 4 or something may prefer to go for that particular toy, or go for that particular project equipments and so on. So preferences will also differ. Preferences will also create a variation in the want. So as I told you, not very specifically designed for each and every person. You cannot have a like a fixated thing and say, okay, for this gender, this want is always there. Even preferences may define your want. This is what is very, very crucial and important to understand. Next is, of course, with season, your wants are going to be differing, right? You may want ice cream in summer season. You may want, you can say, umbrellas in the rainy season. You may want raincoats in the rainy season. If we are talking about even in case of winters we may want to have a more warm clothing. In summers we may want to have a relaxed clothing, cotton clothing, and so on. So wants will differ with season, the food choice, the clothing choice, the vehicles you use, the transport you use, and so on. So many things, right? So with weather, with seasons, your wants are going to be different. Then wants are also specific to culture, right? In India, you may have a specified culture and you may want certain things according to that cultural preference. Whereas in European countries, the culture is different, and so they may want something which is suitable to their culture, and so on, correct? Now it is important to classify these wants into two categories. One want, which we call as an economic want, which is connected to be which can be connected and satisfied with the help of money. So monetary things can buy these things, like if you're talking about food, clothing, shelter, if you're talking about mobile phones, electronic things, all these can be things which you can purchase, you can buy with the help of money. And there are also non-economic wants, something which money may not necessarily be able to buy. So if you're talking of fresh air, you have clear sunlight, you have water, fresh water, these may not be something which you satisfy with the help of money. So sunlight you don't purchase, right? It's freely available. But this is what we call as a non-economic want. But we want sunlight, right? We want the rain, but it is non-economic. We are not buying these things, correct? Then, under the classification of wants, we can also have individual wants and we have collective wants. Individual wants would be at the individual level, what the individual wants, and collective wants would be like groups. Even in the country, even in different places, these people want that thing. Like you may need transport facilities, roads, for example. So roads would be coming under the head of collective wants. These are not required by an individual specifically, but it is required by the society in general. And so these like traveling things, airlines, sports stadiums, maybe municipal gardens which you have where you go for walks and all. So all these would be coming under the head of collective wants. Now, another classification of wants is what we call as necessities, comforts, and luxuries. So, very important. Necessities, something which you need, right? Every day, food, clothing, shelter, health, education, all these things are necessities. Comforts would be like a little upward thing. You may survive without it. But of course, if you have those things, your life becomes more better. Like you have a washing machine, you have a dishwasher, you have a robotic cleaner in your home, and you have different machineries to help you out, food processors in the kitchen, ovens, and so on, refrigerators for storage. So all these would be coming under the head of comforts. Now human beings, of course, they want to be living in comfort, so they will demand, they will want all these things. And then finally, something which you don't even need for your comfort but you need to show off, right? And these will be classified as luxury products, those which are made for pleasure, enjoyment. After the first two wants are satisfied, generally it happens, right? So generally you first think of necessities, then you will think of comfort, and once these two are satisfied, then you move on to go for a luxury life where you have pleasure and enjoyment. You have high end cars, you have plush villas, you have luxurious you can say vacations, and so on, right? So after the understanding of what is a want, now we go to the second concept of microeconomics. The second concept of microeconomics is what we call as goods and services. Now we see this everywhere around us, isn't it? Goods, right from the moment we get up, we hold a toothbrush in our hand. This is goods. We have a bathroom towel, we have clothing, we have food, we have so many other things. All these are classified as material things and these are classified as goods. Now, of course, there are certain things which are also where you have to pay for them. Like suppose you go to a doctor, you pay for the consulting of the doctor, right? You go to a professional lawyer, you have a professional accountant, and you're paying for their services. There is nothing like a product which you buy, but you're paying for the knowledge, you're paying for the service that they're providing, and this is also something under the head of economy, right? Economic. So there one is which has material existence and another which doesn't have any material existence, but you pay for those services, right? You uh, pay for those consultancies, pay for those things, right? So this is what is the concept of goods and services. And goods are chargeable, services are also chargeable. Some may be free of cost, of course, that's a different story. But normally goods and services come under the chargeability, the economic type of. The third concept in microeconomics is what we call as utility. Utility is something which is again a very subjective term, but what normally happens is utility is something which is used for satisfying the want. Suppose you are having a rainy day. What do you think of first is when you're going out is an umbrella or you have a raincoat, isn't it? So on a rainy day, in a rainy area, you will find the raincoat and the umbrella has utility. But in winters, when you don't need these two things, there is nothing like rains, you will say that time it is not a utility, it's not useful, it is not satisfying any want, isn't it? So, utility is something which satisfies the want of that person, and what is utility for one person may not be necessarily a utility for another person. This is also true. The next concept in microeconomics is value. Value is a term which we all have heard of, right? Value means what? You say, okay, what is my value? What is the value of this thing? And so on. We use these terms, right? You will understand my value when I die, isn't it? We use these kind of terms. Now, what is this term value itself? Okay, when we talk about value, value means actually it's having a classification now in. Now, when you're talking of value, value can be classified in two types. One is where we are talking of value in use. Now, what is value in use? Basically, it refers to the worth of the commodity or the usefulness of the commodity. So, how useful is the product? How useful is that commodity? Now, if we talk of certain things, these have a lot of value. It is useful in terms of, like, if you're talking of water, water is very essential, very useful, correct? And value in exchange, if you're talking of value of commodity expressed in terms of another commodity. So if I talk of gold, for example, so how valuable is gold? Gold, I say, is worth of 1 lakh rupees in today's date. So I'm talking of worth of that gold in terms of money. If I say how much will be the value of gold in terms of diamonds, if I say I'm going to trade 10 grams of gold against silver or against some other commodity, how much is this gold worth? So if I say I'm going to exchange gold for diamonds, if I exchange 10 gram of gold for diamonds, I will get only one diamond, let's say. Okay. So the value is determined in terms of exchange value. So if I'm talking about rice, and if I'm talking about a costlier item like apple. So rice, if I give 1 kg of rice, I'm going to get just maybe 100 grams or one apple against it. So this is the value in exchange, what we talk of that commodity. Value in use can be different, right? Value, usefulness of that commodity is different in different situations, but value in terms of exchange is something which connects it to understanding how much is the other commodity that we can get against this one commodity. If we talk about value in use and value in exchange, there is a paradox, very interesting paradox. So if we take two commodities, for example, water and diamond, which has more value in use? Tell me. If I keep water in front of you and diamond in front of you, you're thirsty, right? You will naturally pick up water and say value of water in terms of use is more. It is more useful than a diamond. Diamond is just a showpiece. Diamond may buy you a lot of water, may buy you a lot of food. But right now, if I keep in front of you, you want to drink water, you will say directly, if I have to talk about value in use, it is water, right? It is very high value in use. But if I talk about trade value, I tell somebody, okay, I'm going to give you 1 liter of water, give me one diamond, will they will laugh at you, isn't it? They'll say she's gone mad. So she's asking for a diamond against 1 liter of water. Of course the situation will vary, then it will have some value in exchange, but in normal circumstances 1 liter of water cannot have high value in exchange. Am I right? Correct? So value in use is very high. For what? For water. But value in exchange is quite low. But look at the other commodity which I've talked of. It is diamonds. Diamonds, what they have? Diamonds have very high value in exchange. Like I told you, 10 grams of gold can be got with the help of one diamond. If I give one diamond, I can get probably a whole years of meal food against it. Correct? So one diamond has high value in exchange. But does it have value in use? Is it directly useful to me? No. I cannot eat it. I cannot wear it, right? In terms of clothing, like I cover my body. If I'm feeling cold, I cannot use the diamond. If I'm feeling like it's raining, can I use the diamond? No, diamond is not useful. It is having value in exchange. It is not value in use, but it has value in exchange. So you can see the paradox. The commodity which has the highest value in use, like water, has the lowest value in exchange. But the commodity which has the highest value in exchange has the lowest value in use. So this is very interesting in economics, right? So this is called as paradox of value. Another interesting term in microeconomics is what we call as wealth. Now, today we will hear you ask somebody, do you want to be wealthy? He'll say, oh, yes, I want to be wealthy, right? I want wealth. What is this wealth according to you? So, if I ask, put forth a question, what is this wealth? How would you define wealth? You would say money, right? Somebody would say money. Somebody would say, okay, I have something which I can exchange for whatever I want, correct? So, wealth is something defined as anything which has market value and that which can be exchanged for money. So, it has like diamonds, gold, anything in terms of silver, any valuable commodity, any product which you're making and selling. So, all these things will have value in exchange and value which is convertible in terms of money. It has market value basically. So, it can be sold and got. Even if I talk of consulting, so if a person has high educational value and high professional, you can say, understanding of a thing, or high understanding about a particular situation, they can provide consulting service, can be provided and it can be exchanged for money, correct? So wealth in terms of these things is a very wide term. So what you can exchange in terms of money, right? That is one thing, and which has market value. Got it? Now, what can be considered as wealth? Let's see. Wealth cannot be anything. Wealth is having these characteristics. Only then we can say it is wealth. One thing, wealth has utility. So, if I go and sell a diamond, I can get something, some money, and money can be used for satisfying the needs or wants, right? Second is it has scarcity. So unless and until it has some scarce value, it will not be costly. So if I have a share of a very valuable company, then naturally that share has value in the market. It can be exchanged for money and so that scarcity has led to its high value and creation of wealth. Correct. The third important thing is that this particular commodity or this thing what we are considering as wealth should be transferable, isn't it? If I say I possess the moon, then the person ahead will say, okay, give me the moon and take this money. Can I hand over the moon to that person? No, I can't. There are no documents. There is nothing like I can actually hand over the moon like a commodity to the person. So it has no transferability, right? So transferable is very important. I can transfer it to somebody else, and against that I can get some money. And finally, it should have some externality. So unless and until I can give it, I can provide it externally, I'm thinking something and imagining something in my mind which can be very huge in utility, in scarcity, but it is not transferable, it is not external, then there is no use, isn't it? Now let's come to two important terms which are very important in terms of when we go to buy the product, right? When can we buy the product? We can buy the product when we earn some income. Now, income is classified in two terms under microeconomics. One is personal income and second one is what we call as personal disposable income. First one, what we get actually, suppose you work in an organization and you earn a salary of 1 lakh rupees per month. That is your income. But the company says, no, 1 lakh we cannot give you every month. Out of this 1 lakh, I'm going to take away 20,000 of taxes, right? So 20,000 of income tax, some other taxes I'm going to deduct, and after deduction, I'm going to give you the money of 80,000 rupees. So when it comes to personal disposable income, this 80,000 becomes that PDI, whereas 1 lakh is your personal income. Got it? So income, the total amount which you earn in hand, the total amount which you actually earn will become your income, the personal income. And after you pay the taxes and everything out of it, not the expenses, but we are talking of taxes, income tax, wealth tax, social security, whatever, the taxes which you are paying from this, that is reduced, and what is in your hand, lying in your hand now, that becomes your personal disposable income. Then we have a term which we call as economic activity. In microeconomics, you need something what we call as economic activity. And how does this economic activity happen? It is first, there is some kind of production. So there is a factory, there is an establishment which produces goods. This factory then distributes these goods, right? Goods into the market. Then the goods go into the deeper markets like retail markets, and then they are exchanged for what? Generally for money. So you give the product and you get the money in return. Then finally, the consumer, the person is actually using up the product. So that is what is the consumption. So this is how the economic activity takes place, right from production, distribution, exchange, and finally consumption. Got it? And and for having this kind of economic activity to happen, what do you need? You need some factors of production. What are the factors of production? One is land, second one is labor. Labor is the people who work for that particular factory. Then you need investment in terms of capital, money which is put into the business. And you need the owner, the entrepreneur, the person who is working, right, and who has that particular company established. So these are your factors of production. So in the case of what we call as economic activity, and this economic activity is based upon the factors of production. Got it? So these are the basic concepts in microeconomics. So we learned in this particular part 2 of chapter number 1 that what are the two branches of economics. One is microeconomics, second one is macroeconomics, and we learned certain concepts which are connected with microeconomics, the individual level of economics. Okay, in the next part of this chapter we are going to learn about basic concepts which are used, basic terms which are used in macroeconomics.